don't you think we're going to get like some of these hyped business models from the Web3 space coming into Bitcoin?
Yeah, I mean, I think we certainly have already seen that. Whether or not those will be long staying, I think is yet to be seen. Again, I haven't been around for 11 years. I've seen these waves come and go. I mean, the first NFTs were issued on a Bitcoin sidechain counterparty years ago in 2015, 2014 or 2015, I believe. So these are echoes of hype waves of years past, cycles past. And at the end of the day, I think people will try them on Bitcoin. Whether or not they'll be long lasting is another question. In terms of 1031's portfolio for ordinals and inscriptions, we like it because we have a lot of mining exposure, and the miners are more profitable when people are issuing NFTs on Bitcoin. But for me personally, I think that's noise. Money is the most important tool, arguably, that we use as humans. I think energy and money are number 1 and 2. And the total addressable market for the market of money, a monetary good, is massive, hundreds of trillions of dollars. And so that's really where my focus is, and our focus is at 1031, is really backing the companies that are creating user experiences and accessibility to the best money in the world.
Okay, welcome everybody for a new episode of Bitcoin Equity Talks. Today I have with me Marty, who's the general partner at 1023 VC. Can you present yourself, Marty, and tell us a little bit about your company?
Yes, thank you for having me on. Yeah, as you mentioned, I'm a managing partner at 1031. We're a Bitcoin investment platform backing what we believe to be the strongest companies in the space, building out the infrastructure that will lead us to a Bitcoin standard. So our investments span across the realms of custody, exchanges, financial services, Bitcoin mining, consumer apps, and we're really excited about what we're building at 1031 and the companies we're backing.
Okay, before we go into your portfolio of companies or your business model, I wanted to know a little bit about your personal story and what brought you to Bitcoin.
Yes, personally, I've been in Bitcoin for 11 years now. I was working at a managed futures fund in Chicago. We were a fund of funds that index commodity trading advisors. And as an analyst on that team, I was tasked with writing commentaries on why markets were moving the way they were. And one of the main areas of focus for me was currency markets. And that was around the time that Janet Yellen was chairwoman of the Federal Reserve here in the United States. We were transitioning to QE2. I mean, as a young analyst, I really didn't understand what the Fed was doing here in the US. It didn't make much sense to me. And I found Bitcoin around that time, and Bitcoin made a lot of sense to me. And so I decided to dedicate my life to it, and ended up in the space professionally due to the fact that I started a newsletter in 2017. When the price was running up during that cycle, a bunch of friends and family were texting me, emailing me, asking me questions about Bitcoin because they know I had been in it for quite a while. So I started the newsletter. That took on a life of its own, which started a media company, TFTC, which I founded and still run today alongside 1031. And I've basically built a strong brand of TFTC, educating people about Bitcoin over the last 7 years. And along the way, also joined a mining company, Great American Mining, was one of the founding members of that team. And we really focused on Bitcoin mining in oil and gas fields, helping oil and gas producers mitigate their natural gas flaring upstream on oil and gas well pads. And so it's been a crazy journey over the last 11 years. It's nice that we're sitting here talking today as Bitcoin's screaming above $61,000. I think the industry has reached a state of maturation that is extremely exciting for everything that I'm doing personally and professionally. We're extremely excited about the opportunities we see at 1031, and it seems like we're hitting an inflection point where more and more people are beginning to realize that Bitcoin is not only something that's here to stay, it's probably going to be a very important part of the global economy moving forward.
Okay, education, newsletter, education, Bitcoin mining, and now investing in Bitcoin companies. You have a very wide spectrum. And why did you decide to invest in Bitcoin companies? When I look at the whole ecosystem, there's billions, and with the recent ETF launches, everybody's pouring money on Bitcoin itself. But on our ETF and on the listed Bitcoin companies that we follow, we see the market caps are still very small compared to other investment topics like gold companies or AI companies or wherever. How come there's such a big difference between the money allocated on one asset versus the companies building on the asset? And what brought you to start and found a venture capital fund based on these companies?
Yeah, so it really was driven by the fact that, again, myself and my teammates at 1031 were hardcore Bitcoiners that really understand the innovation that Bitcoin provides and the utility it can provide individuals and financial institutions in the long run. And we were scratching our heads looking at the broader venture space focused on crypto overall and the amount of dollars that were being allocated towards broader crypto as opposed to Bitcoin. It's something like over $40 billion, I believe, has been allocated towards crypto projects. But when it comes to companies that are focused on Bitcoin specifically, and only the amount of capital that's been dedicated to this space is a drop in the bucket compared to that. Hundreds of millions of dollars, approaching $1 billion now. But so we recognize that there was a massive dislocation in the market where a lot of people were raising billions of dollars to throw at crypto companies that were leveraging token schemes and mechanisms that we frankly don't believe are going to be here for too long. We believe Bitcoin is the signal, and the companies building out the infrastructure that'll give individuals and businesses and nation states access to the Bitcoin network are going to accrue the most equity value in the long run. So really for us, it was a massive arbitrage opportunity where a lot of the venture market really bit the bait of the noise and crypto and the fast gains that were coming with the token schemes, and really looking over Bitcoin and glossing over companies focused on Bitcoin. So we decided to start 1031 and raise some capital to begin supporting these companies, which we believe are going to be generational companies. They're going to be around for decades, if not centuries, because they're really focused on the most important asset in the world right now, which is Bitcoin.
It's funny because we have the same sales pitch, you for your fund, and which is a venture capital fund, and myself for our ETF, which is a Bitcoin equities ETF. And the problem is that you mentioned that people are pouring billions into Web3 and crypto projects, which are, I mean, I've looked a lot of them. I did my whole shitcoin per course at a certain stage and then went back to Bitcoin, because once you have understood like how difficult it is to create something like Bitcoin, and then decide that now we're going to create 10 more projects that are going to be much better or more performing, etc. It's not that easy. And so how do you see the time in which we're going to stop talking about Bitcoin and start talking about Bitcoin companies? I thought it would have happened like 2 years ago.
Yeah, I mean, having been in it for 11 years, I thought it was going to happen in 2017. I thought it was going to happen in 2021. Now we stand here in 2024 and things are rearing up, and I'm very excited, but I'm trying to temper myself. And I think if we take a step back and recognize that within the Bitcoin space, we definitely operate within a bubble of a bunch of Bitcoiners who really understand the thesis and the value prop of Bitcoin specifically. And once you see it, you can't unsee it. You can't stop thinking about it. You can't stop focusing on it. And you convince yourself that, yeah, if I can recognize this, everybody else has to recognize this. It's pretty straightforward. It's once you see it, it's obvious that this is something that the world needs and is going to benefit from. But again, I think even still today, we're in a bit of a bubble, and the broader public does really not understand or grok Bitcoin. And not only that, they don't really understand money, financial markets, inflation. They're starting to understand inflation much more now. It's affecting their everyday lives. But I think we're in a unique period of time where if you're in Bitcoin, you are truly a very early adopter. I think we're still in the early adopter phase. And the fact of the matter is, most of the world just doesn't understand what Bitcoin is and how it's going to change the world. And so, as I would like to see people wake up tomorrow and really grok what you and I grok and understand the value prop that Bitcoin provides. That's simply not the case. It's going to take a long time for people not only to understand Bitcoin, but to rewire their brains to understand that the world they've been operating in their whole lives is running on a corrupt form of money. The monetary systems that we're living within are corrupt at their core and aren't the optimal way to interact with monetary goods, with the central control, the central banks, and the central governments. People are fish in water who were just born into the system, and it's worked for them in certain regards. Up to this point, they expect that this is the way that money works. But if you really take the time to understand what money should be, the money that we're using is absolute crap, for lack of a better term, and Bitcoin is a objectively better form of money that people should be adopting. So I think it's going to take time for the market to unlearn the lessons of fiat monetary systems and then relearn money from a sound foundation and really lean into Bitcoin as the money that they should be using.
Okay, let's go into the company that you have invested in, or that you have publicly disclosed that you have invested in. First of all, how do you select these companies, and based on what criteria, what's your investment horizon in terms of sectors, in terms of specialty, in terms of businesses? Do you have like any strategy in deploying the capital into these companies?
Yeah, I mean, we have a pretty robust investment process. And I mean, two things that we really look for are founders that know what they're doing and can actually go out and build a company. So we're backing founders first. And so trying to find the individuals that grok Bitcoin, are competent operators and can actually spin up a company and get to revenue and hopefully profitability as quickly as possible. Obviously, valuation is something that we really pay attention to and try to make sure that we're getting the best deals and getting exposure to these companies at the best valuations. And again, going back to the arbitrage opportunity I explained earlier, and part of the reason why we started 1031 is because we think there are incredible opportunities from a valuation perspective due to the dislocation in the market and the over focus on crypto over Bitcoin. And then beyond that, it's just larger trends. Like, timing is extremely important. I personally believe there's an order of operations that will lead to Bitcoin's success. So during these early years, we're really backing companies they're building out the critical infrastructure that'll lead to higher level applications and services. So right now, within the 1031 portfolio, we have companies that are Bitcoin exchanges and payment apps. So buying and selling Bitcoin is one of the most profitable business cases in the space to date. And so companies that do that very well and get a lot of adoption are companies that we look for. Security. So companies that are securing Bitcoin correctly and doing it the right way. I'm here in Austin, Texas. I'm right down the hall from Unchained Capital, which is a portfolio company. They're leveraging Bitcoin's native multi-sig properties to bring better custody products to market using Bitcoin's multi-sig. And then on top of that, multi-sig primitive, you can provide financial services. So Unchained has a Bitcoin collateralized lending desk. They have an IRA product. They have a trading desk. And so we've backed Unchained multiple times at this point. It's because we really think they understand Bitcoin custody and Bitcoin, the asset itself. And then beyond that, mining infrastructure is something that we're allocated to as well. And we're very excited about. We believe that there's going to be a intersection of the energy sector and the Bitcoin mining sector over the next decade. And so we view Bitcoin mining as a proxy energy play as well. And so we're backing companies that are building infrastructure that'll make it easy for energy companies to mine Bitcoin. So for example, Upstream Data and Giga are two companies that are building data centers and generators that'll make it easy for oil and gas operators to turn their stranded natural gas into Bitcoin by creating electricity with generators and mining Bitcoin in the data centers. Then on mining as well, we have on-grid exposure where we're invested in companies like Grid, which are helping in demand response programs throughout the TVA and other parts of the United States. And then beyond that, we have invested in a couple of privacy tools and companies that are building the primitives of other second layer solutions that'll sort of play together with the Lightning Network. So Fedi is a good example of that, building on the Fedi Mint protocol, which is Chaumian eCash. And so, yeah, right now across the board, we're pretty exposed across the sector in a way that we're very comfortable with, and it's really backing at this point in time the companies that are building the core infrastructure that will then enable higher level services and applications to be built in the future.
Okay, so if I'm a CEO of a Bitcoin company, I'm building on Bitcoin, and I come to raise capital with you, what are the first criteria you would look at when looking at a Bitcoin company?
How much do you prioritize revenue? How quickly can you get to a state where you're actually bringing in dollars or Bitcoin and attaining profitability? So one thing we really focus on is burn management with teams. Can they build a company in a way in which they'll run as lean as possible and be as profitable as possible? Obviously, first step is, what is the idea? Do we think it's a good idea in the first place? Does the market need it? Again, going back to the order of operations, there's a lot of really good ideas out there that people want to go build, but harkening back to the fact that most of the world is not abreast of the opportunity that Bitcoin provides, there are some really good ideas out there that I think will come to market at some point in time, but maybe right now isn't the best time to begin building that particular product. So timing of the idea and the product is important as well. And on top of that, if we engage with founders that have founded companies before and run companies before and successfully exited those businesses, that's another thing we look for: seasoned founders that really know how to run a business and to navigate the startup world, because you have compounding risk here with building a startup in the first place and then building a startup in the Bitcoin ecosystem. And so founder, timing is the right idea at the right time. Valuation, obviously, as I mentioned earlier, and how quickly can you get to profitability are probably the core areas that we really focus on.
You're a VC fund, so I suppose you focus on the first seeding raises or the Series A. Where do you stop, or you don't have a timing in the lifetime of the business where you invest?
We span the spectrum of stages in terms of investments. So we've invested pre-seed, we've helped incubate some companies. We've also led Series B rounds. So we led Strike Series B round a couple of years ago, and we felt very comfortable doing that because we think the upside for Strike, which is a global Bitcoin application, is massive, even from where we invested in it at when they raised their Series B. So we span the spectrum. We think there's a lot of opportunities across the spectrum. And as our funds grow, obviously that strategy will adapt a bit, and we'll try to size and time our investments with different stages, depending on the quality of the company and how much capital they need at any given point in time. But yeah, it's still extremely very early days. Like I said earlier, we think there's a massive dislocation in the market. And so up to this point, we felt very comfortable investing anywhere from a pre-seed investment to a Series B.
Okay. And geographically speaking, do you have, I mean, all the examples you gave are US based. Is it like your only area of focus, or you can look outside of the US?
No, we invest across the globe. So we've got portfolio companies like Hodl Hodl and Defi, which are in Eastern Europe, based out of Latvia. Mempool.space is based out of Japan. We've got a couple of allocations in Latin America and Africa as well. So while the portfolio is heavily weighted towards the U.S., just simply because most of the companies are starting here in the U.S., we're not focused solely on the United States. We're agnostic to where these companies start, and that's part of our strategy too. Is really driving home proof of work. So feet on the ground. We're going to conferences all across the world, going to meet teams all across the world, and so again, while a lot of the companies that we've invested in to date are U.S. based, that's not our sole focus.
How do you find the non-US? Because I mean, if you look at the US, it's a much more evolved and active market when it comes to Bitcoin companies, and ourselves in our ETF. We have like 75% of the companies in our ETF that are listed in the US, and you have like more money to be raised there, etc. So how do you manage to seed companies that are out of the US, knowing that it will be difficult afterwards for them to raise money outside the US, because the market outside the US is less active and developed as it is in the US?
Yeah, it really goes back to the point I was saying earlier. Like one of our focuses when we sit down with founders is how lean can they run their team and get to profitability as soon as possible. And so the allocations that we have made outside the US are backing teams that are extremely good at that. Hodl Hodl. Defi is launching officially next month. And it's a company that's founded by the same founder of Hodl Hodl. And they've done an incredible job of running a business through multiple cycles over the last 7 years. So they've been around, they've survived. They're able to leverage Bitcoin in a way that really allows them to create businesses that are sort of low burn, which is great. Mempool.space was another no brainer for us. We're an exclusive investor in that company, and they are essentially building the go-to analytics platform for Bitcoin. So they've partnered with every major exchange. If you go and send a Bitcoin transaction from an exchange to a personal wallet and you click the link to check the transaction on the blockchain, it's likely that you'll end up on mempool.space. And so it's really finding the companies that can run lean and then are obviously providing a good product that has global accessibility. And so I think Hodl Hodl and Mempool are great examples of companies that are doing just that.
Okay. And having been in the Bitcoin space for a while now and touching on so many areas, what are the businesses that you haven't seen so far, or that you would have liked to see?
The use case that I'm most interested to see whether or not it develops over the next few years is going back to Unchained and what they're doing with leveraging Bitcoin's native multi-sig properties, creating these multi-sig quorums that enable you to have security assurances of your Bitcoin. But not only that, creates unique sort of contracts with multiple players. So for your listeners who may not know what multi-sig is, Unchained leverages what's called a 2 or 3 multi-sig quorum. So you have 3 keys in a quorum and you need 2 of them to sign to move the Bitcoin out of the wallet. And to date, that's mostly been leveraged by individuals who just want better security for their Bitcoin. But I think in the future, you can leverage that same primitive to do really interesting international escrow. Bitcoin is super collateral at the end of the day. And in terms of making and creating capital efficiencies for people engaged in international trade, making large transfers of goods and money, building off of this 2 or 3 multi-sig quorum primitive can really begin to open up capital markets for international trade and create better escrow services and credit lines for these large transactors in the physical world. And so I think Unchained has begun headed down that path with they just launched a network of keys. And so they've partnered with companies like Kingdom Trust here in the US and CoinCover in the UK to become key agents in their quorums. And you can imagine in the future, you could have large banks become key agents. You could have large oil companies become key agents. And once you have that network of keys with many different agents who can interact in different economic contracts, you can leverage these multi-sig primitives to begin really creating efficiencies across the capital stack for international trade. And so this is an idea I've been thinking about for a while. Again, timing. I just don't think Bitcoin's big enough for it to make sense for most people, but I do think we're approaching the point where it will make sense for international conglomerates to begin thinking seriously about this and using Bitcoin as a way to escrow funds while goods are being delivered, and ways to create credit lines between economic actors. And so that's one thing I'm excited to see if it will or will not materialize over the next 2 or 3 years.
But doesn't that bring you back to the Gary Gensler's argument that, and I'm playing on purpose the devil's advocate here, by saying that at the end you're going to be trusting an Oracle database, which is a better solution than having all this brain gymnastic to that an Oracle database can do much easily.
Gary, I think, was really exposing himself as somebody who does not understand the revolution that's happening right under his nose. Like, when it comes to that, yes, you can have an Oracle database to basically manage the inventory of these things. But when it comes to actually exchanging funds and having confidence in your partner, if you're engaged in a credit agreement, there's nothing better than Bitcoin. I mean, we learned this lesson hard last year in the US, and who knows whether or not it bubbles up, but the banks are fundamentally structurally insolvent across the world. They do not have your money. Here in the United States, we have a 0% reserve ratio. The federal government is going into more and more debt. And so I would argue that the Bitcoin network as a means to attain collateral escrow and final settlement of a transaction is far superior, because you get the assurances of a bearer asset in the digital world. If the Bitcoin is in the wallet and you have a key in a quorum with access to that wallet, you can confirm that the money is actually there. In the incumbent system, whether it's an Oracle database or a banking database, it's all fugazi. Those are all just numbers that are printed on a screen, backed by nothing but the faith in the Federal Reserve and the federal government here in the United States to maintain the dollar system. And I think Bitcoin has some tailwinds at its back right now, because more and more people are beginning to realize that the federal government and the Federal Reserve are fundamentally Ponzi schemes at the end of the day. And I think Gary's Oracle database analogy is completely idiotic, because it doesn't make any sense. We're talking about the realm of money transfer, settlement, and escrow, where an Oracle database can, maybe it can track your inventory, but we're playing in a completely different ball game on a different field.
Okay, I'm gonna challenge a little bit more, if you don't mind. So,
right.
When you're investing in Bitcoin companies, and I mean, the example you gave is a good example of building a payment, a multi-sig, and then having like bigger applications and bigger intermediaries that can leverage the technology. You focus mainly on, I would say, a first layer or second layer. But if you look at the crypto space, where you have DeFi, you have stable coins, you have so many hyped business models, don't you think there would be some of these that would come to the Bitcoin space? I mean, we saw NFT craze 2 years ago, and now it's picking up a little bit on the Bitcoin network. We have ordinals that have quite a decent volume. Don't you think we're gonna get like some of these hyped business models from the Web3 space coming into Bitcoin?
Yeah, I mean, I think we certainly have already seen that, in terms of whether or not those will be long staying, I think is yet to be seen. Again, I haven't been around for 11 years. I've seen these waves come and go. I mean, the first NFTs were issued on a Bitcoin sidechain counterparty years ago in 2014 or 2015, I believe. So these are echoes of hype waves of years past, cycles past. And at the end of the day, I think people will try them on Bitcoin. Whether or not they'll be long lasting is another question. In terms of 1031's portfolio for ordinals and inscriptions, we like it because we have a lot of mining exposure, and the miners are more profitable when people are issuing NFTs on Bitcoin. But I think, for me personally, I think that's noise. Money is the most important tool, arguably, that we use as humans. I think energy and money are number 1 and 2. Which is number 1 and which is number 2 is hotly debated. And the total addressable market for the market of money, a monetary good, is massive, hundreds of trillions of dollars. And so that's really where my focus is, and our focus is at 1031, is really backing the companies that are creating user experiences and accessibility to the best money in the world. DeFi, Web3, that could come to Bitcoin. Whether or not it will stay on Bitcoin is another question. And when it comes to Web3, I think it is coming to Bitcoin, but in a way that many people really didn't approach the problem last cycle, where you had Web3 as the big beam in crypto, where you're spinning up a token and a blockchain for individual use cases, whether that be content creation, or getting points for working out and getting a token for working out if you prove that you work out. I think the Web3 universe, as it was architected last cycle, is completely wrong. We can have these functionalities, but you don't need a blockchain for all of them. And so what we've seen at 1031 and a couple of companies that we've backed that are really expressing this theme is the combination of open source money in the Bitcoin protocol. So use the open source protocol of Bitcoin, and then other open source networks, and you just combine the two. And so, excuse me, there's a couple of trends beginning to materialize that are proving that thesis to be correct. Podcasting 2.0 is one of those. So podcasts are distributed via RSS feeds, which is an open content distribution platform, or mechanism, excuse me. And basically, when I send my podcast out, I put a Bitcoin Lightning address in my RSS feed, and there are now applications that are coming to market where people can get a podcast player with a Bitcoin wallet in it, and they can send me Bitcoin as they listen to the podcast. And so I think when it comes to Web3, that is a direct peer-to-peer monetization of my content, but it wasn't spinning up a new token and trying to attach a token to my podcast. It was simply combining open source money and Bitcoin with the open source content distribution mechanism I use, which is RSS. So that's one example. We're seeing more examples of that with open source communications protocol like Nostr, which uses WebSockets to distribute notes in a decentralized way. Bitcoin has been implemented in that protocol. I think what Lightning Labs has built with their L402 protocol is really showing that you can begin to embed Bitcoin within the internet stack. And I think that's going to really be expressed in the world of AI, where if AI agents become more mature and popular, they're going to need to spend money. You're going to have to give an AI agent a task. Hey, I want to go buy a plane ticket on this date from this city to that city. And they're going to need to be able to spend money. You're not going to give them your credit card information. You'll just load up a Lightning wallet that they hold and give them a budget to go spend. And so that was a long-winded way of saying, I think the monetary aspect of Bitcoin and the monetary use case is the most important and most valuable. And I think that will win out in terms of what Bitcoin is used for in the long run. And then when it comes to Web3, I think that certainly will be enabled by Bitcoin, but just in ways that most people haven't really thought about it up to this point in time. It's going to be combining open source protocols, not really creating individual tokens and blockchains for each use case.
Okay, I like how you put it, like there's like a big, massive cake, which is money. And then there are some small other Web3 applications, which is like podcasting, tweeting, whatever it is, and using money on top of it. What about like tokenization of real world assets?
That, frankly, that does not excite me at the end of the day, because I don't think the only part where Bitcoin really melds the physical world and the digital world is the mining world, where you turn energy into electricity, and you turn that electricity into hashes that allow you to add blocks to the Bitcoin network and receive Bitcoin in return. In my opinion, that's the only place where the physical and digital world really will meld together with Bitcoin. Because let's take the tokenization of, like, you had this trend in 2017 where somebody was trying to tokenize vending machines and the soda bottles in those vending machines. Like, yes, you can tokenize that asset and you can prove that it got to the vending machine on the blockchain. But then when you go to buy the soda, like let's say you went and bought a soda and you used some cryptocurrency to prove that you own the asset and you followed it along the blockchain until you bought it. And then when you bought it, you used your ID to prove that you were the owner of that. If I walk up to you and take your Coke and drink it in front of you, did you really own that asset at the end of the day? And so, like, yes, you can technically tokenize and try to attach physical assets to the Bitcoin network, but at the end of the day, there's nothing Bitcoin can do to enforce the contract that you're trying to create with this tokenization of the physical asset. Bitcoin only knows what's going on within its own network. It has no authority to basically execute contracts in the physical world.
Yeah, I totally agree with you on this view. One other challenge I would raise running a big equities fund, myself and yourself, is when you're investing in these companies, unlike a traditional venture capital company, you're looking for performance, but you're looking also for performance that beats Bitcoin. How do you manage like pitching your fund to your investors, knowing that you're competing with I believe it, and I'm sure you do, with one of the best performing asset that is out there, and how do you convince them to invest in your fund versus just buying Bitcoin, knowing that Bitcoin yourself, I suppose, know that is going to have an amazing performance in the future?
Yeah, I mean, that's one of the things we tell investors up front is make sure you have your Bitcoin allocation first. But in terms of like outperforming Bitcoin, like you have to, like, for the founders that we're backing, they're Bitcoiners too, right? So they're making the conscious decision themselves. They're saying, all right, I could stay in a well-paying fiat job and just buy Bitcoin and be set for the rest of my life. But they're making the conscious decision to say, no, I think I can get more Bitcoin in the long run by going and starting this company focused on Bitcoin that gives individuals access to the network and provides them utility as they're operating within the network. And so that, number one, the founders are making this decision as well as us. And then number two, it's really focusing on valuation. Again, going back to the disconnection and the arbitrage opportunity that we have identified is like there's not a lot of capital focused on this space, and so the valuations are extremely enticing from an investment perspective and a risk-adjusted return perspective. And then on top of that, if the rocket takes off, we're going to be riding that rocket because all the companies that we're backing are going to massively benefit from these waves of adoption because they're building the infrastructure and the rails that will get people onto Bitcoin. And so we think a combination of founders who have made the conscious decision and believe that they can stack more Bitcoin by starting these companies in the first place is a good signal. Valuation, very, very appealing right now. And then if Bitcoin succeeds, all these companies that we're backing, we believe we're backing blue chip companies are going to succeed massively. And then on top of that, we're very big advocates of the companies, again, getting to revenue and profitability as quickly as possible. And then on top of that, building a SATS flow mechanism, make sure they're building a Bitcoin position on their balance sheet as well. And so when you combine all those things, and also the fact that we're really focused on finding the teams that run as lean and as profitably as possible, we think that in the long run, a lot of these companies are going to see massive success and benefit from Bitcoin adoption, which should lead to increased revenues, increased profits, increased Bitcoin on the balance sheet. And then over time, as the incumbents become more aware that they need a Bitcoin strategy, there's going to be multiple ways for these companies to monetize, whether it's IPOing at the right time or potentially getting acquired by a business that does not want to build the infrastructure themselves and are willing to pay a pretty high premium on that.
Okay, So going back again to your investors, I mean, I get your business, and they have like your pitch, but at the same time, they wake up and they read the news, and I mean, their most recent article was written by the ECB, saying that Bitcoin is useless, and they wrote like a series of arguments why the emperor is naked, and they're gonna come up with a digital euro that would do exactly the same as what Bitcoin does, and problem solved. So, what do you say to investors when they read that?
It's pure projection from the ECB. They're afraid of Bitcoin. It's a lie outright that they'll create a digital euro and it'll be exactly like Bitcoin. Like the whole value prop of Bitcoin is that the ECB and the central bankers that have been meddling with the global monetary policy for a century now, the whole value prop of Bitcoin is that they have no say in what happens in terms of Bitcoin's monetary property, and they never will be able to compete because their whole job is manipulating monetary policy. And so Bitcoin stands alone as a direct response to the meddling of central bankers, and to think that they'll be able to recreate a Bitcoin like digital currency is just completely false. It's literally anathema to the way they operate. They'll never be able to do it. And then number two, in terms of Bitcoin just being something with zero value, probably is objectively false. Today, with the price at 61,000, Bitcoin is the fifth largest base money in the world. It just passed the oldest fiat currency in the world, the British pound. And so we have the dollar, the euro, the yen, the yuan, and Bitcoin is number 5. And so these central bankers and regulators can say that Bitcoin is nothing but hot air. It's just objectively false. Bitcoin is the 5th largest base money in the world as it stands today, and I think it will be the base money of the world at some point in the next couple of decades. And then on top of that, if you want to look into apples to apples comparison of the Bitcoin network compared to one of its base money competitors, there's an individual by the name of Matthew Mazinksius. He runs a podcast called Crypto Voices and an economics website called Porkopolis Economics. And he ran the data comparing Bitcoin to the Fedwire system here in the United States. And so it's an apples to apples comparison. Bitcoin's base money, Fedwire moves base money. And already the Bitcoin network is transferring more than twice the transactions that Fedwire is. It's not as much value yet, obviously, because the dollar is massive. So I think Fedwire, in terms of value transfer last year, did $2 quadrillion worth of transfers. Bitcoin only did 1 trillion, 1.4 trillion. But if you look over time on a log scale, the ratio of Fedwire value transfer dominance compared to Bitcoin 15 years ago, or excuse me, in 2010, 14 years ago, that ratio was 22 billion X. Today, it's around 700X. And during the last bull market, last all-time high was at 190X. So if we keep going through these cycles and Bitcoin keeps gaining adoption and market cap, it'll reach parity with Fedwire value transfer maybe in a cycle or two. So in terms of Bitcoin not being a competitor to the ECB, again, it's projection. They're afraid of Bitcoin. Bitcoin is competing objectively if you look at the data. And on top of that, the European Central Bank, the Federal Reserve, the Bank of Japan, People's Bank of China, any central bank that is saying that they will create a digital currency that will provide you the same utility of Bitcoin is objectively lying, because Bitcoin's whole value prop is that it cannot be controlled or manipulated by central planners, and the value prop of the fiat monetary systems is that they are expressly controlled by central planners who know better than you and know the correct interest rate and monetary base to create an economy that can facilitate as smoothly as possibly. And I think the data has shown over the last 3 decades specifically that these central banks really don't have control, and their manipulation of these monetary systems leads to a lot of stress, economic stress, and dismay for the individuals that are forced to use those currencies.
Okay, interesting. And this year, it was a very interesting year. We had the Bitcoin ETF launches in the US with the massive success that we have seen. We have the Bitcoin halving, which is a strong catalyst coming in the next months. Um, uh, what's go- what's gonna be the next catalyst or the next big thing that the Bitcoin community or that you would be looking at for Q2, I would say, or Q3, Q4, 2024?
I think more nation states getting in and putting their support behind Bitcoin. I think behind the scenes, I've had a lot of conversations with individuals who have been in the Middle East recently, specifically Dubai. From what I'm hearing in Dubai and Saudi Arabia, even the power brokers there are really interested in Bitcoin, and so I think I would keep an eye on the Middle East. I think they're going to make a big push into Bitcoin in a big way, whether that's monetizing their oil and gas assets via Bitcoin mining or accumulating a Bitcoin treasury directly using some of those oil and gas profits to buy Bitcoin outright and put it on their sovereign wealth funds. That's what I think the next big domino to fall is now that we have BlackRock and the ETFs and the stamp of approval from the institutional investor class. I think we move up the stack to sovereign nations beginning to join El Salvador and other countries that have put their endorsement behind Bitcoin. And I think this cycle will see much more prominent sovereigns step into the fray.
Okay, interesting. So that's all the hopes we can both have. Our time is up. I'm gonna wrap it up. Thanks a lot for joining the show, and keep on funding these Bitcoin companies. So one day they will be part of our ETF. And as soon as you have any announcement, seed round, or wherever news you want to share about your company, feel free to reach out and continue this discussion.
I will definitely be reaching out. Thank you for having me on. It's been a pleasure.